In my previous videos on supply and demand zones, I focus on two types of supply and demand zones. One being a turning point, i.e. when price comes to a swing low and then retraces away from that swing low, causing the swing low itself. That is obviously a supply and demand turning point, as demand has exceeded supply at the swing low to cause the turn in price, and also a breakout from a consolidation zone, i.e. where we have price in relative equilibrium. Price has a breakout from that equilibrium, meaning demand exceeding supply or supply exceeding demand. And then we went on with the latter, i.e. consolidation zones, are focused on adapting that for the FTB, the first time back trading strategy, i.e. looking for supply and demand zones that have substance in terms of a number of bars and height of the zone, and have clear edges, clear decision points or SRs defining the edge of the zone, a strong breakout from the zone, and an arc-like return, and then we can take touch trade on those types of zones. Okay, so the next logical progression is when we look at price action, i.e. areas, zones that we can't take touch trades in accordance with the FTB strategy, where we have to look for price action around those zones to determine whether price will get rejected away from that zone or whether price will consume the supply and demand in that zone and break out the other side. Okay, so we need to consider what types of zones are significant. Okay, what types of zones we want to be looking for price action around. And that's going to be the basis of this video, focusing on how to determine significant supply and demand zones on any given chart. If we focus on every single supply and demand zone, our chart would get very hectic. So we need to filter out these, determine which ones are significant and which ones are insignificant. So if we looked at the traditional way of marking up, the basic way of marking up supply and demand zones, when you're looking at turning points and consolidation zones, you can see, turning points here, here, a consolidation zone here and here that we've had a breakout from. Likewise, turning points, consolidation zone, turning points, consolidation zone. That's how our chart would look, okay? But that's not how I would mark up my supply and demand zones when I map out my charts first thing in the morning to determine the significant supply and demand zones, the ones that I want to be looking for price action around. And how I do that is I consider the following main things. Okay, significant supply and demand zones for me are ones that have broke something important. I've broken a higher low or lower high sequence, etc. Broken significant support resistance zones or swing high, swing low points. Okay, so if a supply and demand zone has actually consumed something, broken something significant on the chart, then that is significant supply and demand. Okay. Likewise, if supply and demand has consumed a significant opposing SD, if supply and demand that initiated a momentum move or just a move, a big move in the opposite direction, supply and demand that capped price multiple times within a range, and finally ignored supply and demand zone. They're kind of the main points I look at when I mark up my chart to determine what is significant supply and demand. Okay. Now, I would point out that this isn't something you can pick up easily overnight. It's not something I'm going to show a few charts now of going through that process, but it's not something you're going to take away from this video and you're going to go, oh, that, I'm going to be able to apply that in my trading from day one. It's something that takes time. Okay, with anything worthwhile in trading, it's not something you find a set of rules for, you find a system, and then you start applying it from day one, and you start, hey presto, you start making money. That's not how you make good consistent profit in trading. It takes hard work, it takes a lot of time, it takes a lot of research and a lot of practice. And it's the same with this. This is the very basis of how I start my charts first thing in the morning with blank charts and mark up my significant supply demand zones. Then I look for the price action. The other part of it is obviously the price action I use to get into a trade, which is obviously very separate to this. But this is the very basis of how I mark up my charts. So it is extremely important to get this right. But it takes a lot of practice. Okay, sometimes it's a lot harder than others, but you have to go away from this video and you have to go away and look at your own charts and go back over periods in the past and random pairs, random time frames, and map it out and understand. Use this logic I'm going to explain here and the points I've described right here, and map it out and be able to fully explain why price has moved from one to the other and why it's ignored certain supply and demand zones but held others. Okay, and then you'll be able to establish what is significant supply and demand and be able to use that in your trading. So if we take this, it's just a round. Doesn't, you know, the pen time frame is pretty irrelevant for the purposes of this exercise. So if I start to the left, obviously we start left, we tell ourselves the story of what price has done and why, and then we work to the right and you work out what's important. So we have this demand down here. I can't see what's to the left, but you can see price has tested this demand to the left. It's a retest of this demand following, you know, this arc-like move. We've come down from the temporary highs as price has reacted to essentially what is ignored demand in here. So we've got what I would call a support resistance pivot zone, or supply and demand pivot zone, doesn't really matter. What is the same thing, is basically areas that have order concentration based around them. That's what SR zones are. And then we've come and formed a higher low here relative to this low. So we've got this kind of structure now. So what price does next will be key to determine the immediate direction, and you can see price shoots up above this high here. So this is the demand that broke this high and broke this, what is essentially a wedge, a lower high and a higher low sequence. Price breaks it from here. Price breaks this high from demand within this area. Okay, so that is significant demand because it broke something significant to the upside and caused obviously this move. Price then retraces, comes down to this flip area. You know, this is how, what I would mark as just a general flip area along here. It comes back down to this area. We come back up, we'll make a lower high. So the next key thing that price did was break this demand. Okay, this is the first opposing demand from this high. Okay, it comes down, we form demand, we come back, we make a lower high. In order for price to get back down to this area, price has to break this demand. Okay, so the supply that broke this demand is significant supply, and that's within this. I mean, this is a high time frame chart, and what I would do is zooming and pinpoint these in more detail. You find the story in terms of where the actual decision points are, and refine these supply and demands. But that's beyond the purpose of this video. It's just finding what are the significant supply demand zones in any given time frame. Okay, so that supply broke this demand, so that's for that significant supply. Price then ignored this demand, this significant demand, as you can see to the right. Significant ignored demand becomes significant supply, as you can see. Price reacted to it to the right. Price then breaks through, you know, third, fourth time back. We have a breakout, we react to something to the left down here. There's nothing significant going on down here in the schemes of the whole price curve, what I call the whole price curve. We have a lower high, a lower low structure. So the next significant demand is going to be the one that breaks this sequence, this little channel down here. And you can see we get the higher low, price breaks it, and we react to the ignored significant demand to the left. So if we look within here, there's going to be demand that caused this higher low, isn't there? Okay, price reacts at demand within here. Okay, there has to be demand within here that stopped price moving within this channel and shooting down here. Okay, so that has to be significant demand because it broke the whole sequence of what price was doing, i.e. the lower high, you know, the break and retest of SD zones within here, which caused a downward channel. So price broke that by forming a higher low here, and then it confirmed it with a higher high here, and therefore this channel was negated and we had the breakout from it. Okay, but that demand must have come in within this area here to cause that higher low, and that led to the breakout of this channel. Okay, so there has to be stacked demand within there. One that caused a high low and one that caused the breakout of the channel. The one that caused the higher low has to be within here, and the one that caused the breakout of the channel has to be somewhere within here. And price tells you where that was, but obviously before this point you wouldn't know it's there. This is one where you'd have to zoom in, you'd have to find the SD structure within here and use the same kind of thought process as to what I'm doing now but on a lower time frame. So you split this down into significant supply and demand zones within this, depending on what the price action did within here, but using the same thought process I am on this higher time frame. Okay, so then if we move to the left, you see what price did on the way down. If we just look through this, you see the first opposing demand was here. Why is that the first opposing demand? That demand led to this high, which broke this high here. Okay, demand becomes supply up here. You can see that's what price, that's where you get the SD flip come from. The SR, this supply demand zone flip areas. Supply becomes demand becomes supply. That holds, which has to short swing control, which is kind of a price action term. Short swing control, price is going to hold that supply and it's going to head further down. Okay, then we have this kind of channel going on, and you can see along here we've got that capping price, and price has a straight line move up through that area. So this is demand that initiated this whole, this whole move, that initiated this, and it also broke this SD flip area, which obviously, again, if shorts were in control, price would hold this and it would head down to here and potentially break in a kind of bear flag like formation, but it didn't. Demand here caused price to break this channel and break this SD flip, and also initiated the whole momentum move higher. We then had price break this whole area and its demand within here. As you can see, price reacted to this supply, came down, found demand at this kind of more minor former supply, ignored supply, before shooting higher. So this is now a new demand that caused price to get above this area. It also caused price to get above this former ignored demand turn supply, so it's third time back to this, and get back up to our significant supply to the left. So this is what initiated the move. This is what should cap the move. This is the first significant demand on the way down, so that should cap the move if longs are in control, and that's what we'd be looking for in terms of price action. If I was considering going long, I'd be looking for long PA off here, and if price breaks this, I know that shorts are likely in control and price is going to head back down to this demand. Okay, and that's how I map out where price should move during any given day. So once you can see price reacting to this significant supply, we've got significant demand here, we've got significant demand here. If I was trading on this day, that's how I would have my charts marked up, and I know where I'll be looking for price action and where I expect price to move between. Okay, and what price does is consume that. We have one reaction from it. You can see a sequence of lower highs, which is confirming buying weakness and selling strength. We then finally consume it here, and we retrace up. Okay, price obviously has to make a lower high. If shorts are strongly in control, we don't expect price to break this lower high sequence. Okay, so we have lower high, and then we have a lower high here as price reacts to supply within this area, holds that, and that causes the move back down into the demand that initiated the move. Okay, so that is now significant supply, because that's a supply that consumed this significant opposing demand and held this lower high structure and caused price to move down into here. Okay, then getting to the end of our chart now. If we look over here within this area, you can see obviously the significant supply held price. Okay, why is this demand significant? Because he broke this high. It also broke, we had this demand becomes supply, INSD flip. It broke this supply, and thus it also initiated the move from here into the significant supply. So there's a combination of three reasons there. This isn't necessarily strong supply now because it was significant demand. It's more significant if it was significant demand that was ignored, but it still is an SD flip zone. price consumed that, it's broken above this high, this temporary higher high, and it initiated the move into the significant supply, so therefore it's now significant demand. Okay. I'm going to take a blank chart and go through. This is very recent actually. This is dollar yen H4, I believe, literally the latest chart. So again, you have to start with the story to the left. This is one big range within here. And you have to look at the supply within. What is the significant supply within here? That price had to break this whole range on the upside, and that will give you what is the significant demand on the way up. And then you'll be looking at what supply broke that significant demand on the way down, and that gives you the significant supply. And then you apply that when you're looking at price within here. You've got an idea. You know what the significant supply is up here. Okay, so on the way up, price had to break this lower high structure. Okay, and it's supply within here. You can see this is what capped price. This is the supply that capped price within the range. That stopped price moving higher and caused the lower high. It was then supply within here roughly. Again, you'd mark it up and then you'd pinpoint it by looking at the same thing as we're looking at here, but on a lower time frame. It was this supply that broke this higher low structure. So this initiated the move and it capped price to the upside. It stopped price moving, caused it forming the higher high to confirm the higher lows here. And then it was this supply within here that actually broke, it broke the lower highs because it broke that lower high. Sorry, it broke the higher lows. It broke this higher low here, and you can see that's what price we tested before heading lower again. Okay, so we need to find the demand that broke this, the supply that capped price. The demand that broke this is the demand that caused price to break out up here. And what essentially we've got there is obviously the supply here, which is an SD flip. And then you're going to have demand within here. You've also got this lower supply here, but this is the ultimate supply cap at the top, so that's the most significant demand, the one that broke that. You've also got demand here, for example, that broke this, but it's going to be demand within here, which again you would pinpoint a lower time frame, something like that. And you can see it's going to be round about here, but round about in the upper area, because that's a reaction to the supply to the left. Price comes down, it finds demand right there to shoot up. Okay, so it's going to be somewhere here, more focused on the upper area, but pinpointing that isn't the purpose of this video. Okay, so let's just mark that up again. We've got that. Price goes up. This is a reaction to something to the left that you can't see. This is the first opposing demand. This is what price it finds demand after the breakout of the high. No surprise, it comes back down, retests. It finds demand within here that causes price to break that high. Okay, so this is the first opposing demand that price has to break to cause this swing high, to confirm this as a true swing high and to cause a further move down. Okay, so supply that broke this demand is significant supply. Breaking the first opposing demand, going against the opposing, I don't like to use the word trend, but going against the opposing move, this is the first opposing demand. If price consumes this, it could potentially initiate a move much further down. It doesn't necessarily have to. It could move to the next lower demand and then move up higher. But the first opposing supply and demand against the preceding trend-like move is always going to be significant. So let's mark these up again. So you've got significant demand within here. And likewise, you're going to have a significant supply within here, which broke this significant demand, and that paved the way obviously for a move much lower down to this area, because there's no significant demand left within here. Okay, so that significant supply is over here, and the significant supply that broke this is clearly going to be somewhere within here. It could be up here, but it's more likely to be lower down. You can see price, if it was up here, up the top there, then you'd like to see price retrace up to it, or trace higher before dropping. But you can see the rejection, and then price found supply somewhere in here, and that's actually been tested as well. It's actually within here. When you zoom in, you see it's actually within there. But this is dollar yen H4, so you can look at this for yourself. So it's from last week. Current date being 29th of March 2014, so it's weekend in that week. So significant supply, again, if you zoom in for yourselves, you can see that was actually consumed here. That consumed the significant demand. This supply consumed that. Okay, so if we take that to the right, you've got a further kind of mini price action going on here. Again, pretty simple. High, low, this high here. Pretty simple that demand initiated this momentum move, and it broke this high. It broke this kind of channel that was going on like that. So that's significant demand. Consumed that supply, come back to the significant demand. So if you were looking for a long trade, for example, on Friday, you're like, well, what is significant supply left in here? Well, pretty simple one, really. You've got a wedge. The supply is going to be within there. That broke this wedge to the downside into the significant demand. We consume that up here. So, and this is where you can read where price is. It's all about reading price. Where's price likely to go next? If longs are in control, if we come back up again, well, where's the next significant supply? This supply here is being consumed. This supply here is going to be consumed. There's now no more supply until we get back up to this area. It's slightly more complicated up here because this supply has already been tested once. There's actually, because we had the SD flip, we actually have lower supply that broke the SD flip. Because price came down, it did this, and it came down, it tested that, it actually formed demand here that caused price to get back into the supply. So there's actually slightly lower supply, slightly more complicated, but there's actually slightly lower supply that actually broke through this area that caused price to get to the next significant demand. And if you actually zoomed in, you'll see why it's up at this area to the left. But the important thing is seeing that, reading the significant demand and significant supply there. So that's how I would have my chart marked up on that pair. It would be like this on that time frame. I'll pinpoint them in a bit more detail, so I can, especially when ones I'm looking to trade around, because I need to know with 100% accuracy exactly what needs to be consumed and what doesn't. Okay. So that's how my chart would look at, and that's what I'd be looking at in terms of determining what zones I want to be looking for price action around. Okay. Okay, next I'm going to look at an example that I gave my price action course members to do recently. The question was to mark up all the significant demand zones and supply zones starting from this swing low. So I'm just going to use the charts I use to answer their questions and their responses. So again, if we start from the lows, using the same kind of thought process, and that's what it's all about. It's all about following the same thought process over and over again that defines what price action trading is, and that's what we've got to do to mark up the significant supply and demand zones. So we have this lower high, higher low structure. You can see price broke the lower high into the demand down here. So we have new lower supply down here. This is the supply that capped price to the upside, to the downside even, and caused the lower highs. This is supply that broke this low, and then we essentially got an FB of it, false break of it. So we got demand in here that broke this supply, and this was significant supply in here because it temporarily broke the wedge. Okay, and then obviously we've got supply, significant supply because it's what capped price and initiated the whole wedge, becomes demand, and this is where price found demand on the retest. Okay, so we can kind of redefine this, because where price found demand on the retest, you can see that's an SD flip now. It found demand here, which broke this. Then it found demand here on the retest down here, which initiated the move up to here. Significant swing low to the left. There's going to be demand in here that broke the swing low. And this initiated the consumption of this supply, and this was significant supply because again it broke the higher lows here, and it led to the consumption of this demand and a break of the significant swing low here. So this demand broke above this swing low and initiated the move to consume this supply. Then get another wedge forming. Supply that broke the wedge is going to be here within this area. Okay, and now so you're going to have demand that broke this on move back up, and it's likely to be centered around this area. You can see like a swing low here. You can see kind of all the history along here in terms of price oscillating around here. So the demand is likely to be, you can see technically, that's the higher low there. If you zoom down to a lower time frame, you'd see that as a typical higher low structure compared to this low, and it matches the swing low to the left. The swing lows and SR zones have is what I call order concentration zones. Okay, which is beyond this video. So that will be within here roughly is where price will find demand. Have found demand to break this supply. Okay, price moves into this opposing supply. This is obviously the demand that broke this swing high and led to the move in, and this is what's capping price the upside. We retest it a few times, then we break it. So this is SD flip and SD flip along here. There's going to be supply that broke that demand. There's nothing new down here. These are all existing significant demand zones. This is the supply that broke the SD flip, led to the move down, initiated this move down on the retest up here. We've also got demand that broke what was essentially another wedge, but the significance is it broke this supply here, so there's going to be demand within here. There's also going to be lower demand here because price made an FB of this swing, a false breakout of this swing low as a deeper test into this demand. So there's got to be demand that overcame supply within here, and it overcame this supply up here as well. In terms of the price action, what was happening here was price came down. So if sellers are really strongly in control here, and we're going to look for a break, and price going to break through this demand, then you've got the scene of the false breakout where there would be opposing supply, and this obviously significant demand turn supply as another opposing supply, and that one of those should have held. It didn't. Price got back above that, so there's got to be new demand within here, within this bigger demand that caused price to do that. Now it's a case of redefining this lower zone. Again, swing low. This would be the lower time frame, kind of high low. You can see this is where the price initiated the move to consume this demand. You can see price reacted to there on the downside. You can see this is where price found demand in the retest to consume this SD flip area. You can see, this is essentially an SD flip now, completely confirmed. Multiple tests, multiple initiations of moves that broke key significant supply and demand. You've got the SD flip or the SR flip up here now as well. And you've got the key demand here which broke through this supply. So as the price action goes on, you can redefine zones. Obviously I'd be redefining by zooming in as well. Okay, so that is how you would mark up the significant supply and demand zones at that point. And the difference between some of these and others is, that's more of an SD flip. That is definitely an SD flip, as are these two shaded areas. Obviously this is significant demand because it broke this supply and the wedge, but these are all SD flip areas which have strength and have importance. They're more important in terms of hurdles for price within a trade, and also what should hold on a retest if the opposing side of the market is in control. Okay, which is slightly beyond this video, but for all intents and purposes, the 1, 2, 3, 4, and 5 are the significant supply and demands as well. I'm looking to potentially initiate a trade, okay, by looking at the price action at these zones. So now we follow through with what price did. We had a false breakout of the highs. This flip area is what should hold if longs are strongly in control, so you get that. It doesn't, it comes down, we have a retest of 1. We then have supply that broke the SD flip, that holds, okay, and price comes back down. So this is our first sign that longs aren't in control and shorts are gaining control, and potentially to look for a short. The fact that this breaks, price comes down to here, then this holds on the retest. Okay, so what price does between 1 and this new supply here will tell us where price is heading to next. We break through. So then this is where I'd be looking for a potential trade. I'd be looking for a lower high and supply up here, and PA lower time frame PA off here to try a trade a break through 1 down to firstly the SD flip and then potentially down to 2. The next significant demand. You can see what price does. It reacts at our SD flip, comes back, holds supply within here, which caused the consumption of 1. Again, maintaining the lower high structure. That moves the price down to 2. Okay, that's not relevant. Price oscillates around quite a lot. You can see, this is 2 and 3 are very significant demand, because it's basically, if you looked at a time frame up, this is actually an M5 time frame, but if you looked at a time frame up, you see, within this whole bigger range, that's the key pivot from throughout the whole range. Okay, so you can see price reacts to 2, it comes back, it still holds this supply. This is important supply, or this supply up here, because that's the supply that's capping price to the upside. Multiple attempts to try and push higher failed. Essentially, eventually we get the deeper test, strong rejection down, the deeper test of 3, and finally last test of 3, supply that caused the break of these lows, down to the SD pivot, comes back up before then retest 3 on the underside, down to 4, another lower high as it tests supply which broke this area, and then down to 5, which initiated the whole move, and you're kind of at the bottom of the whole overall range now. And also we get the move up from there. Yeah, this is an M5 time frame. So you can see, mapping out how price should move between zones and what are significant and insignificant helps us to filter out where to look for PA trades and how to map how price should move between the zones. Okay, and these orange zones are just kind of the new supplies that would have formed that cause the breaks of the significant demands I've marked. And that's kind of it. I've got a follow-up video which I will release, which is a video I did for PA course members where I sent them some questions earlier this week. It's a video going through their responses and kind of the correct answer, the correct way of doing it, the same sort of exercises. And the thing is to go over your own charts and do this for yourself, be able to explain logically using the same thought processes why price move between A and B and C and D. Okay, it's not about looking at price action as such at the moment, it's more about identifying what are the significant supply and demand zones, because that's the starting point. For me, first thing in the morning, every morning, starting from scratch, marking up what are the areas I'm looking for price action during the day or during the session ahead. Not really the day, the session ahead. Okay, so if you get those wrong, then obviously you're off to the wrong footing straight away, and get those right, then that's half the battle done. And I appreciate, I've been through things quite quickly on some of these, so take them. This is a video so you can pause it and go through and reason for yourselves the logic I've used, and then apply that on your own charts. And as I said before, this isn't something you're going to pick up and master overnight. It's going to take lots and lots of practice, but it's certainly rewarding if you do